Let's also get in Rahul Sharma, the Director, Head Technical and Derivative Research from GM Financial. Rahul, we did saw some recovery coming in trade on Tuesday, but the last half an hour we just gave up onto that, and we are still lower compared to what we were on Tuesday. Do you see any support at current levels to come in for the benchmark at least?
Yeah, so 23,200 is where we have our eyes fixated on. 23,200 is an important Fibonacci support of the entire bull move or bull market that we saw post the general election outcome. We came very close to that at opening today, and post that we are seeing a bounce back. And along with this, there is a bullish divergence which is happening on the hourly charts, and this is a triple bottom bullish divergence which is happening. So we feel there is a strong case for a pullback, for a bounce back from these levels. Whether the bounce back translates into a reversal or not, only time will tell. But we feel that 2200, the risk reward is fairly favorable for fresh investments, for fresh entries. And I think this is an area where one can look to add on to, the names which are available at a bargain list. So we've actually created a list of stocks which can be bought in this week, where we feel that risk reward are highly favorable, and a bounce back could mean anywhere in terms of stock performance, the moves can be 5 to 10%, whereas in terms of Nifty, the bounce back once it starts can easily be around 800 to 1000 points, from where we are currently trading.
Any hurdles that you could see for the Nifty, that's the benchmark, and what are the stocks that you were just mentioning that you have suggested a buy at the current levels?
Yeah, so in terms of the hurdle, 23,800 is where the proper resistance for the Nifty is. Once that crosses, that should open gates for more. So, but as of now, let's speak of the immediate levels. So 23,200 roundabout plus minus 100 points. We can look to add stocks which are looking good. So we've created a list of 7 large cap stocks and 7 mid caps and small cap stocks. So to name the large cap ones, Indian Hotel remains our top pick. Then is Vedanta, Infosys, Trent, Bajaj Finserv, ICICI Bank and State Bank of India. So these are the stocks which we feel can do well, from a bounce back perspective. And on the small cap and mid cap space, we are liking Dixon Tech, we are liking Inox Wind, Himmat Seed, Philips Carbon Black, Suzlon, Angel One, and V2 Retail. To name the 7 stocks from the small cap space. So these are the stocks where we feel the risk reward is favorable. Charts are indicating that a turnaround is around the corner. And once the kind of bounce back that we saw 2 days back, 300 points in one day, the bounce back can be very fierce. So we are hoping that 2200 is where we should see some bit of a recovery in the market.
Point taken. The other group of stocks which are coming under pressure are, of course, some of these financiers to the entire news flow reaction that we are seeing. So, PFC, REC, PNB, Canara Bank, SBI, these are all down in the trading session. What within some of these financials would you recommend a buying on dips?
We would go with SBI. In fact, it is there in our large cap list as well. Now, whatever the negative news is, probably it should be digested or priced in by the end of today's session. Around 775, the stock is trading at its 200-day EMA. And PSUs have been relatively outperforming the entire market over the last few days. So relative strength was inherently there in this sector, barring the last 7 8 trading sessions where everything came down along with the Nifty. So we feel that risk, at 775, it's a good bet, and one can look to add on to, on a day when there is bad news in the sector. And, we feel that, the bounce back can take us back to around 850 odd in no amount of time. As far as PFC, RFCs are concerned, these stocks have also taken a beating today. We would rather wait for a couple of days, and post that we'll take a call on this one. But from this entire space, SBI is the one to go for. Once it starts moving, probably we can shift focus onto the other names in the sector.
Okay, so that's the take coming in on some of these financiers. But on the gaining side, you have Indian Hotels, which has actually hit a record high in an otherwise weak market. And then Nalco is the other one, which is doing quite okay. And I'm just taking a look at the broader markets quickly. Amber Enterprises, their features on the list. What's the take on some of these names?
Yeah, so Nalco is a pretty solid one, and we have it in our Diwali picks as well. The stock can do well even from these levels. One can look to buy. Although stock is up 4% today, but we feel it has got long legs. Our target is around 300 on the upside, so one can look to buy at these levels. And in case there is a smallish dip, in the next few trading sessions, one can look to add. As long as it remains above the 225 mark, the bias remains positive in the same for a target of 300. And speaking of Indian hotels, we've been recommending this stock since last 4-5 trading sessions. The stock is doing extremely well. We feel that 900 is where the stock is headed for. Look to buy on dips if any, and in case you're holding on in this stock in your portfolio, it's best to stay put, especially in the negative market. This stock has sort of defied gravity and gone on to hit new highs.
Okay, point taken. On that note, we'll let you go. Thanks so much for making time and speaking with
Enviro Infra Engineers Limited now proposes an initial public offer of its equity shares. The 100% book built issue is being offered at a price band of rupees 140 to rupees 148 per equity share of face value of rupees 10 each. Issue opens on Friday, November 22nd, 2024. Issue closes on Tuesday, November 26th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, stock exchanges and the BRLM, Hem Securities Limited.